Hello everyone, George DeSantis here with the Look at the Market for the week ending Friday, August 29th, 2020. Uh, Before we get going, I just want to mention again, I know I sent some of you an email about our friend Steve who passed away last night, Steve Hartman. I heard from his son Alan and from his wife Dolores. And Steve, as I said in my email to many of you, he was a very good friend. In fact, I was thinking a little while ago that when I first started doing this review of the market every weekend, I would type it out. That's before my nephew Mike showed me how to do the videos, and that's long before videos existed on the internet. And I would just keep it for myself, and it helped me to review to establish some expectations for the coming week. Well, Steve was the first person that I shared it with. So when I think of Steve, I have a long history with him. I loved him. He was a very good friend. And we'll all miss him. Those of us who know him, we'll all miss him. But let's get on with the business at hand here, in spite of all that. So we'll bring up the disclaimer. Uh, The disclaimer simply informs you that I'm not an investment advisor, and if you need investment advice, you should seek it from someone who is so qualified. I'm a psychologist, and I do this for my own purposes, and it's appearing as a video on YouTube, and anybody could look at it and make of it whatever they will. So for those who are new, and sometimes a few new people, what I will do is review the general market. That's what I generally do. Review the general market using the S&P and sometimes the Nasdaq as well, and then take a look at some other indicators and take a look at some individual stocks and try to see if we can glean some insights for the coming week. So we'll begin by looking at a weekly chart of the S&P as usual. So here's a weekly chart of the S&P 500. This is one we look at every week, almost every week, whenever I do look at the market anyway. You can see that after this fall here from February to March, end of March, we recovered. Parabolic went below the most recent bar, and it continued to remain there. And the parabolic was indicating that we have a nice uptrend. We still do. Um, and this is on the weekly chart. You can see that we had, especially on the daily chart, I calculated a target from a triangle on the daily chart of 33.75, and we are now at 35.08. So we long past that 33.75. We also had a Fibonacci extension of 1618, 3400, and we also broke above the February high of 3393 or so. So we're in blue skies here. We're in very little resistance, if anything, overhead. I don't think there's any overhead resistance here. We had new highs. What else we can point out here? Well, all the averages are above each other. The shorter ones above the longer ones. The 4 above the 9, 9 above the 30, 30 above 50, etc. So another thing to look at is that since we came out of the squeeze, the market has been rallying up, and it's been on the weekly chart. It just recently hit the 2 standard deviation line. So we won't be surprised to see a little bit of a correction or something like a consolidation, if you wish. And we'll see what that looks like on the daily chart. But the other indicators look strong. RSI 14 I'm using. That is above this 60% line. Now RSI is an oscillator, and it goes from oversold to overbought. But when you have a market trending up like this, very strong uptrend, the oscillators don't give you very good signals. They are best when you have a non-trending market or a market in a trading range, and this is not what we have here. I just wanted to put it on to show you that even if you're looking at RSI, yes, it will say that we are overbought, and we can remain overbought for a long time. Now, MACD, we have the two different MACDs with two different sets of parameters, and they're both trending up. We use this one for sell signals, and we use the other, the default one, 12.26.9, for buy signals. So we had a buy signal here on it over here. But you know, Alex points out that when MAC starts trending up from below the zero line, the histogram starts trending up from below the zero line, that is usually a very good time to be buying the market. And that would have been right here. That would have been on April 9. But of course, we had some earlier signals like a bullish engulfing candle right here, and that was on March 27th. So there were a lot of those signals, but let's not belabor the point here. This market is very strong on an uptrend, and we could turn now to the daily chart. On the daily chart, you see a similar picture where since we made this low in March, we've been trending up, and that's continued and been in place for a while since that we saw when it was March 22nd we started trending up. um so we had this triangle here, and that's where we calculated the target of 33.75. Now that's passé. We're already blown past that. We're at 35.08, and you can see all the averages, moving averages are above each other. Don't worry, I won't worry to repeat what we always say about them. You could see that we weren't worried RSI because, again, it's an oscillator that doesn't give us very good sell signals at all when the market is trending up. Not very good at all. And you could see here that on the daily chart you have MACD, both of them trending up. And the sum of the rate of change indicator went positive here above the 4% line, and it's remained there ever since. So both the weekly and the daily charts on the S&P are looking very bullish. And no need to look at the Qs or the NASDAQ because it's a similar picture. We do have a nice uptrend. Now you could take a look at some charts from stockcharts.com. We often take a look at these. The first one we tend to look at is Apple, and you could see that Apple is at a new high. It's splitting just like Tesla is, and a little bit of uncertainty as to what's going to come next when it splits. But anyway, this is Apple's chart. It's sort of consolidated here after that big run up. Next chart we have is the new high, new low index, and you could see that since the drawdown here in March, that we rallied all the way back past that critical minus 4,000 line, as we learned from Alex. And once that was the case, off to the races. And now we have new highs far exceeding new lows. We have 989 versus more than new lows. So the new high, new low index is still very bullish. So we have the impulse indicator on the S&P here, and it's green. On the daily chart, I think it is, yes. Let's see what it is on the weekly, just for kicks. Let's see what we got. Also green. So, we went past that. We broke above that previous high in February, and now we are making new highs as we saw on the other charts. And this chart shows us the percentage of stocks of the 100 S&P 100 above their 200-day average, and you can see it's 67%. We usually like to see that above 50. Okay, but there it is, 67%. Here's the seasonal chart of the S&P. It's really the SPY, which is the ETF of it. And you can see that I scanned for the best trade toward the end of the year here, and I could see that as we might expect, from the middle of October or so, until the end of the year, in fact, going into February, we usually get the nice big trend. That's when the market moves the most, So I just want to show you that seasonal chart. So let's turn to Shaken Analytics. As you know, I'm very fond of this software. Made very good use of it, made a lot of money with it. So this is SPY, or the ETF of the S&P, and you can see that it's because it's an ETF, you don't get the same rating on the power gauge. It was bullish, and now it's sort of neutral. I don't know. I'm not quite sure what the gray means. The gray rating here means. I gotta find that out. In any case, if you look up here, this channel, S&P is now above, SPY is above the upper line on the channel. So according to this, it's somewhat overbought, as it was here in June. So I don't know if we're going to get as much of a pullback as we did here, but it's not unlikely to see, as far as I'm concerned, it's not too unlikely to see a bit of a pullback since it's overbought in this indication here. Um, and money flow seems to be pulling back a little bit here too. So that's the S&P. Now I have all the other ETFs here, including some that are not the spiders, like TQQQ, because I trade the TQs, you know. And you can see what this one has just been trending up a lot. And way ahead of that. Obviously, I should point out this is a Direction ETF, so it's very volatile. If you're going to trade it, be very careful. XLB, the materials or minerals, etc. You can see that that's also uh, trending up nicely. And that's one of the top two. Well, it's really the top one here on Shaken. XLV, the healthcare one, is doing pretty well again. XLY, the discretionary, that's doing well. You can see it here, doing well. ARKK is not one of the spiders, of course, but I own it and I like it. And I could tell you it's been up 100+%, since it's been up a hell of a lot since it's made its low here in March. I own it and I will continue to hold it. One of its biggest holdings is Tesla, and I think that accounts for a lot of this action here, this big move. SPY, we looked at that already. The communications ETF, that would have stocks, if I'm not mistaken, like Netflix and maybe Disney and quite a few other companies like that. And you can see that XLI, the industrials, are now bullish. XLK, the technology is also overbought here, but and overbought here, and XLP. So those are the major ones that are doing well, and you can take note of that. If you're interested in the stocks that I currently own, this is a list here. I won't worry to go through all of them, but this is a list of what I currently own. It's NIO, the Chinese car maker, Synopsys, the Qs, TSM, the semiconductor, Taiwan, Apple, Adobe, as I said, Arc, Cadence Design. Some of them are overbought. Many of them are overbought right now, but I'm not trading these. Most of these I'm not trading. Nvidia, see, overbought again. But PayPal was oversold and it moved up nicely. Tesla, of course, I have a big position. And this ETF here, WCLD, which is the Wisdom Tree Cloud Computing ETF. I like it. I bought it. Now, I have another list of stocks here. So I went through many of these lists, these lists here, and I picked out stocks, most of them oversold, and I want to just go through some of them with you so that you can make a decision whether you want to buy any of these. I don't own these. I may own a few of them, but I'm just want to show you what we have on the oversold list, okay? So the AEIS is oversold. You can take a note if you wish and check them out yourself, of course. AGCO, I mean, I don't know many of these companies, but you can see they're oversold. Look at this indicator here. It becomes oversold, and you can see that this one pulled back close to the 21-day average. I'm not going to go through all of them now, so we'll soon find out. This